Okay, folks, we're in business, it looks like. So sound is active. Screen share should be active. You should all be able to see my screen now. Just a reminder, attending a webinar presentation can be quite heavy on the bandwidth and bandwidth resources on the internet. So if you're using any of the programs which might disrupt that broadcast, it may be worth shutting them down. So if you've got Skype open or TweetDeck or something like that, it's worth shutting it down just so that you can reserve that bandwidth for the webinar presentation. It is Monday the 8th of April 2013. I really hope everyone's had a great weekend, but it's back to the grind now. Jay, I guess you should be fine with MT4, if you've got trades open, you might want to keep that open to one side anyway, right? So I hope everyone's had a great weekend. What's happening on the calendar? I guess it's worth a quick glance first of all. NFP is well and truly out of the way. I guess a lot of people view the figures on Friday as being fairly disappointing, but in my own perspective, I think it's a little bit of a blip on the economic calendar, and those NFP numbers will start getting back up to good health probably by the next release. You do get seasonal blips every now and then. This week the calendar's fairly light, not a heck of a lot going on. We've got some Chinese data which is being released throughout the course of the week, mostly producer and consumer price data and trade and industrial balance figures. A lot of economists, and I'm doing that and I'm kind of hyphening my fingers at the same time, a lot of economists and pseudo-economists, which most of us retail traders are, tend to look at those figures as a sign of health, or for a sign of health in the global economy, but what that might mean on an instrument and what that might mean on a chart, I'd be damned if I know, because I've never managed to figure out any kind of direct or indirect link or a consistent price movement when those Chinese numbers come out. A lot of people talk about the link between Chinese numbers and what would happen on the Aussie dollar or what would happen on the Kiwi or those commodity crosses, but again, it does tend to be a little bit of a mixed bag. The Cyprus crisis is maybe fading a little bit into the background now. We've seen some signs of recovery in the Euro USD. I was very careful there not to say some signs of recovery in the Eurozone. That would be a completely different issue altogether, but we're seeing some signs of recovery in Euro USD. We're going to take a look at that in a short while, but just be warned that the Eurozone crisis tends to shift from region to region, and there is some talk now hitting the wires about Portugal and what's happening over there with their High Court rejecting the austerity measures or something like that, and all of those austerity, I guess, financing and bailout or bail-in money, as the case may be, all being linked with the countries individually implementing those austerity measures. There could be some problems coming up there, and I guess it'll be interesting to see how the euro reacts to news out of Portugal. What will be more interesting is what kind of lessons the ECB has learnt from the debacle over Cyprus, and how the ECB and the Eurozone countries generally react now after that to any new incidents that occur in any of the countries. So some stuff there, some data coming out on the calendar, but very light generally. Maybe some picture growing in Portugal, and that's something to bear in mind. We could start seeing volatility being reflected in the euro crosses as a result of that. Okay, so let's make a start. Only a handful of charts to look at this morning. We're going to start with the Euro USD. and then we're going to take a look at the yen crosses. We'll take a look at Euro GBP, Pound Swissy, which we tend to do quite often anyway. We'll take a look at the Swissy, maybe Euro AED and GBP USD, and then if there's any charts you guys want to look at or any questions you have, we'll start to address those. So starting with the Euro USD, we started selling the Euro USD up here at 37 handle, and we were adding to those shorts. We're practically out of those positions now, just holding a small vanity position on Euro USD. And there are a few levels which interest me in this, which I'm interested in on Euro USD. I think that this wave down that we've had from 137 actually is the beginning of a new bear trend, and as far as that high is concerned, 137, I am believing that we have hit the high for the year here. So I'm not expecting for that level to be breached. What I'm rather suspecting is that any rallies that we have, or any significant rallies that we have, at some point, at some level, they're going to be capped. And worst case scenario is that the price ends up rushing all the way up there to about 137, and we're double topping here, and then the price starts collapsing. But I'm going to start looking before 137 for a cap on the Euro USD if she does end up pushing even further north from here, which I'm still suspicious about. But if it happens that she pushes further north from here, then I guess the key levels to be looking at are established SR blocks. So we have one of those around the 3150, and we have another one around the 33 handle. If she pushes through the 33 handle, that will have me on the back foot a little bit, and it will have me exercising caution at that point. But I think that these are the key areas that to be looking at to see if the momentum changes direction and if she starts breaking down again. I've always said at these sessions that, generally speaking, when you see momentum developing in one direction or another direction, you don't really want to be fighting that momentum. What you ought to be doing is either joining that momentum, or if you have a bias in the other direction, just wait for the price to change, right? So don't necessarily be loading up as the price is heading higher or loading up as the price is headed lower, but wait for that to change. And when you see, I've got a net bias here on Euro USD which remains very firmly short. I think in the next 2 to 3 years we're going to have Euro USD at parity, but that's just me and my crazy talk. Once the price has gone up and it's hitting those levels, if she turns from those levels, you start getting bearish candles, you start getting bearish structure, you start getting bearish momentum. That would be the point at which you want to start joining that bear rally. So I'm not necessarily interested in fighting it as she moves higher. I have a bearish bias, and I will wait for her to turn down, start facing south, and then I will look to start initiating positions. What is interesting about the Euro USD, and here we're looking at it on a H4 time frame, was that as she was falling, we can see that kind of SR structure establishing as she's falling. But if we're looking on a daily time frame, we really don't have a heck of a lot of structure, right, on the daily time frame. And when I'm talking about structure, if we're looking at the move north on the daily time frame, how she was hooking over, establishing port as she moved ahead, we're not really seeing that. In fact, if we're looking at something like this, that's gives a much better idea of the kind of structure that I'm looking for. So daily time frame, I'm looking for something like this to happen, and that will give you a very clear bear structure on a higher time frame. That's what I'm looking to form on this instrument. As far as the monthly is concerned, and that's the one that I'm really monitoring this pair on, the interesting level comes again, it comes in around those same areas that I'm at before, but we're talking there around the 33 block. What's going to be interesting, and we're still at the very, very early stages of this month, is that last month we had a bear candle. That's our March candle. Here we are in April, and at the moment all that's happened is we've had a retrace of last month. Would it be unusual when you have a bear trend establishing that you have a bearish candle followed by another bearish candle? And I'm kind of imagining what's going to happen this April. It will be something like this. Alright, so quite often you get a pullback to last month's open. Sometimes it can push through a little bit deeper, and then it starts dropping, and the candle starts resuming trend. These are the considerations that I have with Euro USD. So based upon the current price structure, based upon the bear momentum that we saw develop over the last couple of months, I'm still keen on looking for a continuation of that bear momentum. And my chief consideration is based on where I'm seeing resistance, which is at near 133, although it is quite possible that she could fail well before that. And by the end of April, is it that we're going to have something like this developing, right? So will the April candle go and close like this? That is the key consideration. It could happen, of course, that the April candle goes and closes bullish, which is where we are right now, and then next in May we end up with something like this. So you've had kind of 1 to 3 structure going on, which ends up looking something like this on wave structure. That too is something which is possible, but like I said, with the Euro USD, and if you remember, if you're here in January, and I was talking about that bearish bias on Euro USD, and I was saying, look, once you have a bias, it doesn't matter if you're missing a 2, 3, 4, 500 pip bull rally. You get involved when the price starts moving according to the map that you have made for it, right? So that's what I'm doing right now. It's a waiting game on Euro USD. I'm going to wait to initiate a short position if I see the price moving in my direction. If I see this month turning bearish, then I will look for that to follow through. The Eurozone crisis is by no means over. Even if you're considering that it is over, then you need to start considering a couple of other factors. Which is, even if it's over, I think that the euro is permanently scarred, and even if it's over, it does start to look now, and this hasn't happened in a long time, but you know what, we're starting to get strong dollar moves off of strong dollar data, and that is something we haven't seen in a normal while. The traditional narrative over the course of the last 5 or 6 years has been risk on, risk off. Strong dollar data, weak dollar. Weak dollar data, strong dollar. And that narrative seems to be changing now. The perspective seems to be coming back to real world, which is that the American economy is developing a lot faster and a lot better, and with a lot more stability, despite the last poor NFP figures, than the European economy, than the British economy, and a lot of the economies around the world. And the price of the instruments, the price of the dollar, eventually will start reflecting that in a very, very strong way. That scenario is essentially what we're looking to develop, but we need to see that in price, and we need to see that on our charts. That is what I'm looking for. So as far as the narratives are concerned, I guess generally what really matters is the price and our price expectation. That is what we're looking to develop. If it does push as far as 33, we're going to be looking for failure around that level. If it pushes as far as 37, I think that is just going to become a classic double top scenario. And I think from a charting perspective, if you want to be marking your down trend lines, if you want to be marking trend lines on the monthly chart, they will probably give you good bias, good opportunities to be establishing bias from around those levels. Isn't that interesting, right, with the prices right now? So So that's the Euro USD cut. Essentially, we're looking for the price to start breaking down again, but we just need to wait for this retrace to complete. We need to wait for this pullback to complete. And I think this is a pullback that we're looking at. If we see the bearish momentum develop, we will start chasing that again. Okay, let's turn our attention just very quickly to the Swissy. Here we have the Swissy. You're going to have to excuse my chart. That background is midnight blue. It's a color that I was introduced to by a trader who I spent a lot of last week with. So in fact, let's kind of default. Let's just go to my default template. Here we go. What are we looking at on the dollar Swiss? The dollar Swiss is important to look at because we have that inverse correlation with the Euro USD. One of the things to note about the dollar Swiss, particularly if we're comparing it to the Euro USD, is that we had some very, very significant swings in the Euro USD. We did not have as significant a swing on the dollar Swissy. I guess what that is a reflection of is that most of that weakness that we saw in the Euro USD at that time was more about the euro and less about the dollar. All right, but nevertheless, we've had a significant bullish rally over the course of the last few months on the dollar Swiss, and one of the key areas that I'm watching right now from a charting perspective, and I'll be waiting to see if we get a significant reaction at the level, is that we have some trend walls which will possibly come into play. If it happens that the price falls down to these trend walls, then I'm looking for a reaction. If we get an overthrow kind of situation, then I think that from a technical perspective, that is something that I would normally be looking to play long. Alright, so although she is falling, I will wait for a little bit of bullish momentum to develop on this instrument. Then I'm going to be looking for another leg long on the dollar Swiss. That is something which has potential, and I think one of the earliest indicators for that probably will be that if you're drawing a down trend line, or you're drawing a bearish trend line, if you get that trend line break, that is something which will potentially push this instrument a little bit further north. What we're getting right now on the dollar Swiss as she's breaking south are fractal breaks. These fractal breaks do have a habit, particularly when you get those structured moves. Those structured moves have a habit of being counter trend rallies rather than trending rallies. Trending rallies tend to be pretty ugly. They leave you fairly confused about where you can join it, where you can get in. The counter trend rallies, they tend to be fractal and they tend to break down in a structured way. So we're going to wait for her to break down a little bit further. I do suspect that she's going to go sub 93. She's going to go into the 92s, possibly even into the 91 handle. But once she's gone sub 92, I think that it'll be presenting a buying opportunity, and we can be looking for the instrument to break further north from there. Incidentally, the yearly opening price for the dollar Swiss is coming in around that price handle somewhere. So generally speaking, it's a good area to be establishing your bias from. If the price is above the yearly open, technically the instrument is a long. If she starts breaking below the yearly open, then at that point, if you had a short bias on the dollar Swiss, you would easily be forgiven for having that short bias on the instrument. The worst case scenario for us is, particularly if we're using that yearly open price in order to establish a bias on this instrument, is that the price just decides to cross through the rest of the year, which would have us whiplashed a countless number of times. But generally speaking, if you are using that price area in order to establish your bias, ordinarily, if she's breaking north from there, she's going to break a fair distance, and if she's breaking south from there, she'll break a fair distance south. The general perspective that I have for dollar Swiss is that I think she will end up breaking higher eventually, and we're going to look for a significant retrace, possibly pushing back into those 97s, maybe even heading towards parity at some point. Again, we need to see the momentum breaking in that direction first if we're to have any confidence in that, but eventually it is a scenario which is likely to develop, in my opinion, at some point. Right, so again, I'm not going to put a time scale on it. I'm way too careful for that. I'm way too cautious for that. But it is a scenario which I suspect eventually will develop, and we're looking for a retest certainly of the highs that we hit back in of 2012, going back to July 2012 there. Okie dokie. Let's take a look at the yen crosses. These are the ones which have been providing the most excitement over the course of the last few weeks. We're looking at the yen crosses here. It's going to become a little bit of an exercise in charting and understanding price movement in proximity to any kind of walls which we may have drawn a few weeks back. If you remember when we first started charting the yen and the yen crosses, we started forming this kind of predictive channel for the yen crosses. We found a significant angle, and we were copying that around the screen and saying, what if she turns from here, or what if she turns from here, by forming that channel. That channel, by and large, has been invalidated, although I still like the angle of the line, so that's kind of getting removed from my screen now. What I am interested in now is charting a flatter channel than the one we have at present. So the line that I'm looking at is this one. Let's just kind of get that going on there. The line that I'm looking at now is this one. Right? So just connecting the highs, and what it's going to be about. It's not the line, and it's not about the line as support and resistance just yet. Although it's proven as resistance on more than one occasion, but it's about what that line is going to tell us about price movement, and how we can develop some kind of price expectation. Let me just finish this, guys. Just give me a moment. It's interesting that. So it's just interesting how it just kind of fits. Let's copy that here too. I suppose if we're copying it there, we may as well copy it there. Isn't that interesting? Alright, so let's get some measurements going on. I guess we need to do some measurements. So what's that? From the high to the low, it's about 600 odd pips, which would be quite a decent harmonic. And let's do something like this. And we need to tighten up this line that we have here. Right, I should have done this before I started the presentation. Yeah, I know, lazy. That's me. Okay, here we go. Alright, so we have a new technical chart now on the USD JPY, and what it's about is it's the same exercise that we did the last time. And if you remember when we did that kind of predictive channel, how well it played out and the price reacted at the levels at which we very much suspected that it would. What it's about now really is how we use our predictive channel in order to establish a bias. And the way that we do that is we just look at price in proximity to a line or a level, and we say, you know what, as long as we're above this line, then we're going to remain long, and if it's that we're below this line, it means that technically we're short. Alright, so that's how I'm using these lines and levels now. As far as the general price expectation is concerned, once you've got these channels marked on your screen, what it does allow you to do is to map the price movement. In the first instance, we've seen quite significant bullish momentum develop on USD JPY over the course of last week. If you watched my video last week on my trade notes, then you know full well we were expecting that. We're hitting what I would consider now to be a new mid-pivot in this channel that we've drawn. And so the price expectation would be that if we end up breaking through that on a pullback, well, we've seen resistance. At that point, we would expect that level to turn support, and then we can look for a push higher to the upper end of that channel. That would have us very comfortably pushing through the 100 mark and maybe extending even to the 105. All right, so a bit of a way to go here on USD JPY. From a technical perspective, as long as we remain on the underside of that wall, as long as we remain on the underside of the mid pivot, then generally your expectation would be for the price to do something like this, and at that point it would not be unreasonable to be looking for a retest if you get an SR flip. And that's important right now, okay, because you don't want to be fighting the momentum unless the price gives you a reason to do that, right? So if you're familiar with an SR flip, it tends to look something like that. If you get an SR flip, at that point it would be reasonable to look for a move back to the lower side, to that lower channel wall. Until that happens, I would very much caution selling the USD JPY right now. If you have a bear bias on USD JPY for any other reason, if you're one of these guys who's believing that this move in USD JPY is cyclical, it's that last quarter, first quarter business, then really you want to wait for that flip before you choose to do anything about it. I think that the move that we've seen in USD JPY over the course of the last few months is a structural shift, and I think that buyers will be forgiven regardless of the price at which they buy now. Eventually we will end up hitting higher highs on this instrument. It's just a question of positioning yourself at the safest place, and so any dips which develop, I will be looking to buy them. And I think that if the price does end up back at these lower channel walls, it's just going to provide another opportunity for the bulls to get involved. We've got a very nice high-low structure developing on this instrument now, and what that would suggest is that it's more than just the Bank of Japan involved in causing this structural shift. It's not just intervention here. Actually, it is market participants looking to push this instrument higher. All right, so there is a structural case for that now. Those are the levels that I've got marked on my screen. That is how I'm doing my charting on USD JPY. Quite often it happens that I'm charting the USD JPY and I'm trading another instrument altogether, but I guess she is presenting quite a clean technical picture right now, which would allow us to establish a bias and initiate good risk-defined trades. So I'm suspecting this resistance on the underside of the mid pivot is going to hold for a while. If I'm going to be shorting this instrument, I'd want to see an SR flip first. But generally my net bias is long. What that will do is have me either looking for a pullback to the lower channel wall, or I will wait for the price to break through the mid pivot. On a pullback, I would look for support at that level, and then another extension north on this instrument. One of the things to caution on the yen crosses, particularly because we've seen such strong moves and such strong rallies on these instruments, is that quite often when you see rallies like that, after a while they do end up retracing. You know, it's just an unfortunate kind of fact of life. But what you don't do is to start fighting those rallies. All right, if they're going to retrace, let them do that first, or at least let them start heading in the other direction first, before you start considering getting involved in any short trades. I've cautioned short trades for a long time on these pairs, and I'm continuing to do that now. We have a few positions under active management. We are very, very long on the Euro JPY. So there's the sweet trade that we're kind of involved in. That's the sweetest position that we're in. This ended up clocking the best part right now, 100 odd pips. Right, so that is up about 840 pips right now, which I alerted our legacy group members to and trade notes guys from a long time ago, but particularly last week, over the course of last week, we started positioning long at the tail end of the week prior and at the beginning of last week. I've done some profit taking and just kind of holding a vanity position here now. Euro JPY, as far as targets are concerned, as far as SR is concerned now, the key level is the low that was established on Friday. That is coming in here around the 24 handle. All right, and I'm considering that to be quite significant. I think that from a candle perspective, in fact, if we flick over to the daily time frame, we'll start seeing that. So let's go. Here's our daily time frame. If you ignore that one, that's the Sunday candle on this broker, but the low that was established on the Friday candle is coming in here around the 124 mark. And so from a candlestick perspective, from a technical perspective, there's a question about bias first of all. After the question of bias has been established, then we look to establish risk and answer the question about trading. But from a technical perspective, as long as prices remain above that Friday low, then my net bias remains long. If it happens that we're breaking down below that level, then at that point I would start suspecting a complete retrace of that bullish momentum that we saw develop last week on Thursday. All right, so it's about the 24 level on Euro JPY. One of the other things I guess you can do on Euro JPY is mark a flag line. So we have a flag line here, and it looks as though that's been breached. There's your flag, in case you were wondering where the flag was, so it might not be completely unusual to get a little bit of a retrace to that level before the instrument ends up pushing higher. As far as delta is concerned and measuring the net change, the key level to be doing that from is going to be from our weekly opening price. The weekly opening price is established from last week's closing price, so that is coming in around the 2660 area. That is the area that I would look at as the immediate area of support. If she remains above 2660, the week is bullish. The month has already turned bullish, the quarter has turned bullish. If she remains above 2660, the week is bullish, and if we're seeing momentum breaks above that price, away from that price, then that would give me cause to be adding another Euro JPY long position. If it happens that she starts breaking down below that, then any added positions would be exited. Really what I want to see is a bullish week this week. That's the key issue. So if I'm seeing bullish momentum developing above the weekly opening price, that is my price action indicator about the overall direction that she's going to take. Like I said, long-term target, I think she's heading into the mid-30s, 35, 36, 37 even. Those are the levels that I want to be riding price to, but for the time being, it does seem that she has moved very, very fast. Alright, so a retrace is not necessarily out of the question. If we're getting a retrace down to about 24, I think that will be Christmas. It will be Christmas come early, because I think that is where the buying opportunity is going to be, on a deep retrace, on a shallow retrace. We're just looking at the weekly open price, so we're looking down to about the 2660 area. and we're going to look for support to be established somewhere around there. Again, we don't want to put ourselves in a position where we're fighting the momentum, so we're not going to be shorting this instrument unless we have a very, very good reason to do so. I would suggest that if you are bearish, at least wait for 1 day to turn bearish first on your daily time frame before doing anything crazy or going mad with this. All right, that's going to be the key. All right, what else do we want to be looking at? Let's just take a quick look at GBP USD. Okay, cable. I'm looking at this for a couple of reasons. First off, we've had some we're getting some fractal breaks on the cable, and I'm not believing that the short trend on cable is done with. I think that what we're looking at here is a retracement right now. It's just going to be a question of when that kicks in again, when that bearish momentum kicks in again. We had some walls which we had marked on this chart. I guess we can see now which ones are significant and which ones are not, and the ones which are not significant, they can be removed. They can be removed from view, right? So what we're looking at right now is a fractal break. Here's our first fractal BCB type setup, and getting another one now. And so the potential here, we've got two trade plans here. We've got a default position and a stop and reverse position. Your default position have you looking for a fractal break this instrument. Your stop and reverse, you're actually going to be looking for an SR flip. The price will break and pull back, and at that point you're going to be looking for the wall toward resistance, and then a resumption of bearish momentum to the downside, pushing back towards the 50 handle. And if that happens, I think you get better risk definition than kind of pushing for the default position. So I'm going to be looking for kind of stop and reverse position on the cable to the downside. I think we've got good clean technical setup for it. If it does break down on the pullback, just look for support to turn resistance at that level, and then we're going to look for price to push. Into the 50s. Possibly even deeper, but I reckon a 30 pip stop here would give you possibly a 200-250 pip trade. So from an R&R perspective, once we see that breakdown, I think it'll make it very much worthwhile. We were to the upside. I've suspected resistance to be kicking in here inside of this block, which is coming in just above the 54 handle, but if she really does decide to drive, and remember the default position above that trend wall is a long way. It does look as though we're just getting another fractal forming here before the next break north, but if she does really decide to go for it, then the nearest thing as far as SR is concerned actually is all the way up at the 57 handle, so through the 56, possibly pushing through as deep as 56.70 into the 57 handle. So if you're going to fight the momentum on this, I wouldn't do it right now. If she does break down, then an SR flip makes it a short play. The default position is a long, looking for a drive up towards the 54, and if she's pushing through the 54, there's no reason why she can't make 57. We're also getting a fractal break on Euro AED. You can see that it's quite a clean chart. So a lot of BCB going here. We've kind of got boost, consolidate, boost, and we've got another boost here, another consolidation. It would not. The default position would be to look for another extension north. If it happens that she ends up flipping, then you might see something like that happen to the downside. All right, so it is worth monitoring these pairs. I think from an SR perspective or from a structural point of view, these are rallies that you can look from a day trading perspective to be getting involved in some positions on these instruments. There's enough structure there that will allow you to have interpretation. Okay, folks, that's your lot this morning. That's what I'm looking at. If there's any questions, I'll be more than happy to take them. If there's any charts you want to be looking at. Otherwise, I guess it was a fairly slow March, but April is looking very, very sweet indeed. Largely in part to Euro JPY and what's going on there. I guess if this momentum follows through, we're going to be in the thousands this month. I reckon, right? We're going to be in the thousands and thousands of pips this month. It's going to be a very sweet trade. CAD CHF, actually, why not? Right? So CAD CHF, it's worth positioning yourself long on CAD CHF where she is right now. I'm still very much interested in this. I was a little bit disturbed last week by the sharp drop that she had. Okay, so it was a very, very steep wall. I chose not to go in aggressive, but from a technical perspective, I think that if you're buying anywhere inside of this cluster, right, and we can see she chose to push a little bit deeper, that's okay, that's not problematic, right? But if we see price stalling it, I think, and it's one of those things, I kind of wait for the price to stall now, but I would be looking for the block to hold, and I would look for the price to push higher on this instrument. It is one that I'm monitoring right now. I'm keeping my eyes firmly on this. I haven't decided just yet if I want to start fading this block. I think that's the kind of key issue. Maybe it just needs a little bit more confirmation. It's this sharp drop, so alright, I wasn't expecting the price to drop like that. And you know, we all say, although I know Sebastian, I don't know if Seb's here, mate, but I think Sebastian was looking for a short trade from that block. But I am interested in this block. I am interested in buying this instrument. I think that she's giving you know, if that turns out not to be a harmonic structure and that turns out to be a double bottom, then there will be a lot of pips to the upside. Potentially you're looking for a move all the way up to the 97 handle. It sounds really, really crazy, but there are possibly 500-600 pips to be played for from this level to the upside on the pound Swissy. My caution is that if it turns into a harmonic structure, or if in fact what we're looking at here is a harmonic structure, so you're not looking at something like this, right? You're looking at something like that happening. All of that is defined by this block here, and it's going to be defined by the proximity of price to this block. Again, potentially you have more than one trade plan here. If I can get good risk definition in the block, and if I see a stall, then I don't mind positioning long. If I haven't positioned long in that stall, and I see a break, I don't mind chasing it. Alright, because I think that there's a lot of pips to be played for to the upside. If I see the price continue to break down, then I'm going to look for a continuation of that short momentum, and rather than assuming that it's a double bottom, I'm going to assume that we've got this harmonic type of structure playing out, which means that price will end up breaking down much further. So CAD CHF still very, very much interested in that. She's at the right kind of place where if you're going to be positioning yourself for a long, it's the kind of place where you're going to get risk definition, and it's the kind of place I would look to be positioning myself long. Just be aware of the other argument, right? Just be aware of the opposing argument. But my bias right now in this block is long. I'm just waiting for price action to confirm that. Once price action confirms that, then I'll be looking to chase this instrument north. The confirmation is going to be a long time handle. It's going to be a consolidation in this block, and then at that point I can start getting excited about this instrument again. There are a couple of others which are playing out in a similar fashion. So we also have let's have a look which one it was, I can't remember now. We have the pound Canadian. Okay, pound Canadian, again, it's another one of those where structurally this could well be a double bottom. Alright, and we can see some very, very strong rallies here on the pound Canadian, which is suggestive that there is a double bottom that is formed here, and in fact we may be getting a structural low at that price. You can see the reason for it as well. You can see historically there has been significant support at that level, and it's just a question of whether this breaks down as an IHS, or whether this block in the 53s is kind of going to hold. As far as the current momentum is concerned, from a structural point of view, if you're looking to establish bias on this instrument, then it's going to be at the last block, and that last block is coming in here around the 54 handle. Here you can see we're seeing a lot of structure developing on these commodity crosses, particularly on the Canadian, pound and euro against the Canadian, pound and euro against the Kiwi, pound and euro against the Aussie. They're quite interesting. They're making quite interesting read right now. But again, if this is a double bottom, it's all going to get decided by this 54 block. If the price ends up running away from here to the upside, we've got 59 to play for, and I would not be at all surprised if at some point she went and made that handle. The key issue is 54. If the price breaks down below 54, then you're getting a failed harmonic, right? So it's the opposing argument. But a lot of these commodity crosses, we're getting some interesting price action right now. I like seeing price rush away from a level, particularly when you've got that kind of mid-wave structure established. Usually a pullback to that mid-wave structure does provide reasonable SR, and if it fails as support, then it will become resistance. It'll give you one of those SR flips, which tends to be a significant play. Yeah, but back to your original question, CAD CHF, yes. Based upon the current proximity to that block, it is a long play. As long as it remains in that block, it's a long play. Only if it breaks down below that level, at that point the net bias will end up shifting to the short side. So for the time being, I'm quite happy to be looking long on this instrument, just waiting for the price action to confirm. And then I will be quite happy to trigger my trade. My only concern is the momentum that she fell with, so I want to see that momentum dissipated, if that's the right kind of word, and I guess the only sign of that would be a sideways move. So that's what I'm looking for here on this instrument. Okay, folks, I think that's your lot really, and we're running out of time as well. Thanks very much for attending this morning. I'll be back here. I'll be back here next week, and then I'm off on my travels. Right, so I'll be in Warsaw next week, and then in Helsinki the week after. If you're from that part of the world, and you want to meet up for a coffee, you're more than welcome to get in touch. So I'll see you all the next time. Thanks for attending, and as well just to extend my thanks to the team at FX Street for providing this platform. See you next time.